Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment today. Well, we're going to start talking about the grains. Great action here from Friday to yesterday's low. I want to start talking first about the corn. Corn is entering its most vulnerable time because of pollination. We had just seen a 3-month 85-cent rally in corn. And what happens between Friday's high and last night's low? We give back just about an exact 50%. So what took 3 months to create, we give back half of it in 3 days. The market, I think, it had a lot of longs that were looking to take risk off prior to Thursday's Brexit report. If you're a fund manager and the funds were long close to 250,000 contracts of corn, you had a good profit in it, it's only natural to take some off the table. They're still long 200,000 contracts. And we are 1 week away from the June 30th planting report. That's going to be a pivotal number. It always is historically in the grain market. So how do you play it? Well, we've already had the correction. Can we go lower? Absolutely. But for end users or for bottom pickers, this might be a good time to look at trying to catch the move up if we were to retrace back. But the market gave us a great opportunity there and on a really technical play, and continue to watch where the funds are. The funds really move these markets. They're still long about 190,000 contracts of of soybeans. Soybeans, not so violent a move. Soybeans aren't really made till August. Soybeans are about $1 off their high, but they have just enjoyed a $3 rally. So moving forward, I think the market mover is going to be corn because it's moving into pollination. And then finally, the wheat. Wheat continues to be the redheaded stepchild of the grain market, taking all the selling orders. The funds love to sell the wheat and buy corn and beans. That's a spread that they love to do. Very technical trade in July wheat. We came down and touched a long-term trend line going back to the recent contract lows. We've bounced off it. Moving forward, is that trend line going to hold? I would say that if it does, you may see a short cover and rally. But if we were to settle below that substantially, you may see the funds decide to add on to an already big short position. So I would continue to watch that. Between now and Friday, I think you're going to have whippy markets. Guys are going to be positioning themselves for the June 30th planning report. It's going to be very, very key. And I think the biggest risk is what's going to happen with the weather and with corn pollination. Just 3 or 4 days ago, Friday, going into the weekend, we had a huge bid in corn. December corn got within a penny of 450. The high was 449. The low last night, I think, was 5.5. So you can see how these markets, the bull market, there's an expression, the bull needs to be fed every day. All it takes is 2 or 3 days of not even bearish reports, just nothing bullish, and you see the market corrects violently. So that correction gives you opportunity. Moving forward, I think it's something that if you're trading grains, you really have to be aware of what's going on with the technicals. And then finally, I'm going to switch quickly to cattle. On this Friday, we're going to have a cattle on feed report. We're also going to have cold storage for hogs. And those 3 numbers will, I think, impact some movement in the livestock market. The feeder cattle are at 4-year lows. Fat cattle, which are the live cattle, those are at 5-year lows. So we're trying to carve out a bottom here, but we are very, very oversold. Moving on to the hogs. The hogs have had a great run. Contract highs just 2, 3, 4 days ago. We're starting to look like we may roll over a little bit. You may see some profit taking, but Friday's report, the nice thing about the grains is you have these reports that are specific points in time where you can take a position and know that the day after that report, you're either going to get paid or you're going to get stopped out of your position. So be aware of those reports. Good opportunities in the grain markets. Of course, we're all going to be focused on Brexit on Thursday, but I think that for now, these markets in the livestock and the grains, they've kind of disconnected themselves from the outside markets. We're really trading on rumors of the weather and also what the fund markets are doing. There's a possibility that if the dollar was to skyrocket higher after Brexit, that would be a negative impact on commodities. However, that's typically a knee-jerk reaction. That's kind of a no-brainer for a lot of people. So I would resist the temptation to just automatically get short commodities if the US dollar rallies after Brexit. From the For the CME, this is Chris Robinson. If you're looking for help with your trading or your hedging, look me up on the web.